My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramer. I'll do my friends. I'm just trying to make you a little money. My job is not just to entertain, but to put it all in context. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. We take calls on the show. Nobody else takes calls. I like it, especially on days when the Dow gained 317 points, S&P climbed 0.67%, NASDAQ advanced 0.55%. That's all good for the bulls. But there are times when taking calls can be frustrating. Like when you ask me about heavily shorted stocks, and I really have nothing to say that can advance the ball. Now, I was with someone when I was on vacation with the kids in Iceland a couple weeks ago. His name's Scott, and he said some terrific things to me. He said I saved his company. He said I kept people at work. Made me feel great. One of the ways I apparently saved him money was the day when I came to after my back surgery, and I saw the GameStop stock was at a $400 price tag. Then I called him from the hospital to squawk on the street to say that the price was absurdly high. Sell, 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 sell. He remembers me saying I ripped off the catheter and told people that I had to get out. It was the exact top. And many still blame me for busting this short. He hated what happened to me after, that my Twitter account was overrun by hateful people. So hateful he couldn't read the response file anymore. My kids couldn't either. Now I can't read it. I will never be forgiven for turning against the meme stocks, or in principle, the ultimate meme stock, GameStop. Since these self-described degenerates and deplorables are never going to leave me alone, all I can do is double down and enjoy myself. Maybe hit the Threads app and prepare for the Investing Club meeting tomorrow at noon. So let me do it. Let me double down. Right now, I'm constantly asked about stocks that are flying. And they're not good stocks. Take Carvana, the used car play with a balance sheet from absolute hell.
The house of pain.
That in a just world, so to speak, would have gone under back when the stock was traded at $3 and change last December. There are people who do great work in this market. Their craft is to examine the balance sheet, realize the company will have a very hard time paying the interest on the debt, maybe presume that it can't make it, and certainly it'll only get more difficult if the Fed keeps raising rates, making it more expensive to get financing on a used car because they're based on the short rates. They smell a good short. And why the heck not after that, right? And Carvana's losing money hand over fist. Used car prices are going down, and they own a lot of used cars. Of course, these guys are disrupting the industry in a fantastic way. I loved buying a car from Carvana. I had it show up at my house. I didn't really like it. Send it back. Very different from the traditional experience, right? But those who know the craft, who can look at a balance sheet, read the Fed tea leaves, and notice the decline in used car prices, they know that this company's a goner. So they bet against the stock of Carvana. They shorted whatever they could get a hold of. Remember, you have to borrow the shares before you can sell them short. And they invested in Carvana going to zero. However, there's a whole other group of people who know nothing about the craft of stock picking as I just described, except that if you buy the stock and buy it and then buy it some more and then continue to buy it, and your friends do the same thing, then you can sometimes crush the short sellers simply by vacuuming up all the shares that the shorts need to borrow if they want to make their trade stick. A crushed short means a higher stock. And that's why being short is much more difficult than being long. And when you get to the point where 50% of the stock float is sold short, as is the case with Carvana, a ridiculous amount, yet the longs keep buying voraciously, then the short sellers simply won't be able to keep the stock they need to stay short. The brokers will force them to buy it back, and it'll go even higher when they do.
That was easy. That was easy.
Look, the whole game of short selling is one-sided and unfair. You got to understand that. But bulls make money, bears make money, and hogs, well, guess what? They know nothing. They get slaughtered. So the shorts can only blame themselves for failing to take profits before the meme stock guys came in with the relentless buying. Think about it. The stock went to 3. A lot of these guys were short. They could have just bought the stock back, covered, and made a fortune. But no, they were greedy. They were pigs. Now, shouldn't the actual business of Carvana matter? I mean, you know, the used car sales, the tower of cars. You drive down in Philadelphia, I-95, and you see the tower. It looks like a giant Coca-Cola soda machine filled with cars. I mean, shouldn't that matter, right? No, in fact, not at all. That's not the way it works. As long as Carvana stays somewhat solvent, then the buyers, by their own relentless purchasing, can make it so the bears can't find enough shares to sell short. I know, not fair to the shorts. But the whole premise here is that they want to borrow somebody else's stock, sell it, then buy it back at a lower price. Somebody has to actually lend them those shares first before they can put on the short. And that's what makes this such a brutal game. Before you short a stock, you have to locate that stock from a broker. That way, the person you initially sell it to will get his shares. But there are no guarantees in this business. Just because you located the stock initially, it doesn't mean that it sticks. The broker has the right to break that commitment, to break the locate, to come to you and say, hey, sorry, we got to wreck your short by buying in, literally ending your trade. They don't even have to tell you they're doing it. Next thing you know, you have buyers who are buying Carvana just to bust the shorts. And you have the short sellers losing their stock that they located to begin with their brokers closing out their trade at hideous losses for the short sellers. Now, you think the real owners, the ones who are in it and are watching the stock levitate, would take some profits, for heaven's sake. But something like Carvana doesn't have traditional shareholders at this point. The people who own this thing bought it because it seemed like a good idea, and now they're being rewarded for busting the shorts. They ain't selling. If you tell them to take profits like I did with GameStop, they'll never forgive you. That makes this stock tight as a drum, as they say, meaning short sellers have no way out other than to give up. But do not cry for them. That's not the way it works either. But that is where we are. So when you call me up and you ask me, what do I think of Carvana? I have to tell you that I have no thoughts whatsoever about Carvana, the company, because those thoughts are now irrelevant. I just think about the longs versus the shorts, and the longs beating the shorts. I call it a controlled stock. And right now, the longs are in control. Whoever is in control at any given moment when it comes to Carvana is the winner. What are some other controlled stocks? Well, how about Upstart, which is a company that makes unconventional loans? 35% of that stock sold short. Affirm, which makes buy now, pay later loans, 20% short. Novavax, oh my God, remember that COVID? We had them on a couple of times. They had some COVID formulation. It's 36% short. Riot Platforms, a Bitcoin mining company, 17% short. Marathon Digital, a digital asset tech company, 25% short. And then one of the biggest right now, one that soared today, Coinbase, with 25% of the stock sold short. Oh, man, you could just see the shorts rolling over and dying today. These are all battlegrounds, people. They're battlegrounds like GameStop or Carvana, where the actual business simply doesn't matter at all. Hitchcock would call it the MacGuffin. What matters is there isn't enough stock for the shorts to keep shorting. As long as these short squeezes keep up, these so-called smart hedge funds will all go bust, even if they're actually right about the business, which doesn't matter. So what should be your takeaway? It's simple. Don't short stocks that are already heavily shorted. You're not only betting against the company, you're also betting that this won't become a controlled situation, controlled by the longs, the buyers, who know that the more they buy, the less likely the short sellers can come out ahead. Eventually, enough short sellers throw in the towel for new shorts to come in, but I don't want to be on either side of this kind of trade at that point. How the heck am I supposed to opine on something that's simply a war between the advantaged longs and the disadvantaged shorts, when at a certain point the free riders decide to cash in, or they don't, and the shorts simply get destroyed as the stock wars? Here's the bottom line of a complex situation. I'm not going to start making wagers on the buyers and sellers. I make informed decisions on the companies themselves. Unfortunately for me, the companies, whether it be Carvana or Riot or Upstart or Coinbase, are actually irrelevant here. I want no part of that because it's not the craft I have been taught, and I don't want to recommend a strategy of short busting because you never know how much firepower or not either side has. Scott in South Carolina. Scott.
Booyah, Jim. How you feeling today?
I am feeling well, Scott. How about you?
I'm doing good, but let's see what tomorrow brings for us.
Good point.
Hey,
Good point.
Yeah. Got a question for you. I've recently taken some profits, and I bought into a stock that's been down for the last year and a half, and their earnings for next month don't look that great, to be honest with you. I want to know what your take is. If I should, currently the stock, I'm about break even. I want to know if I should sell it and maybe wait till after earnings to buy down at a lower cost. But my stock is EL, Estee Lauder.
Estee Lauder. Okay, now tomorrow at midday, we are going to do our conference. It is our investing club meeting. And I am going to talk extensively about Estee Lauder, but I am not going to disagree with what Scott at South Carolina, with a very informed position, just said. No disagreement with Scott, but Estee Lauder will be entirely flushed out by me tomorrow at noon. I want you to be in the club right there. Let's go to Stackwell in Washington. Stackwell.
Booyah, Jim. Hey, how you doing today, Jim?
I don't know. That was highly original. I'm trying to calculate it myself. I'm doing fine. How are you?
Oh, man, I'm all right. Yeah, man, I want to thank you for all that you've done. And I definitely got to tell you, Jim, that a lot of them haters out there that's hating on you, man, look, I'm from Seattle, man. We can get Seattle cracking anytime, man, if them guys keep having a problem.
Thank you. My wife was discouraged this weekend. She said, you know what? I think you are at this point more hated than Putin. I said, listen, it's been 5 and 6 the whole way with the Twitter thing. Sometimes I'm 6, sometimes he's 5. Don't write me off yet. Go ahead.
Hey, look, man, we got a lot of people that got your back in a lot of strange places, man, so don't worry about it, man.
Yes. Yes, thank you. Thank you.
Hey, but what I can definitely say is this, man. We've been having a lot of the analysts and things, man, that you told us not to listen to. Upgrade, downgrade, I don't know which way they want to grade. This UNH stock, man, I'm trying to figure out, man, do you think that they're going to hit their highs again?
I need you to take an 8-month view. Why do I say 8 months? Because we got to get to the promised land of next year. Because when United Health reports, you're going to find out that it actually did better than it said when it had these issues involving more people playing pickleball. Now, I got to tell you, the club told me I had to have weights to play pickleball, so I said, the heck with that, man. I'm not changing out of my Levi's. That stock's at 13. I wouldn't touch that either, just for the record. But it could make a comeback. Anyway, look, you can do all the research you want on a specific stock with a short thesis in mind, but if it's already being heavily shorted, could you please just steer clear of it? On Mad Money tonight, we're continuing our series on legislation beneficiaries by taking a closer look at the CHIPS Act. Everyone's forgotten these stocks are about to win just when they're about to win. Then we turn to Larry Williams, typically for more macro themes. But tonight he has surveyed the technicals in storage and moving rental play that I don't think you want to miss. I think it's actionable. I think you have to tomorrow. And Savers Value Village soared on its first day of trading. Can that be sustained? I'm digging the numbers on the newly listed stock. You know we're all over the IPOs. That market's coming back, as will the M&A market after that incredible decision against the FTC today by the court when it comes to Microsoft, Activision Blizzard. Stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.